In this video, I am not making a prediction. What I want to do is walk through today's market behavior as it unfolded over time, following the sequence of session development, reference interaction, and technical condition changes step by step. This is a structure explanation, not an outcome call. To understand today's movement, it is important to begin with the higher time frame environment that price was already operating within before the Asia session began. On the weekly chart, the 120-period moving average has remained a dominant structural reference for an extended period of time. Price has approached this level repeatedly in the past, often slowing down, rotating, or compressing around it rather than moving cleanly through it. At the same time, the weekly 20-period moving average has continued to trend lower week after week. As it moves downward, it is gradually closing the distance between itself and the weekly 120 moving average. This slow convergence tells us that higher timeframe structure is compressing, meaning that directional clarity has already been reduced before today's session even began. With that background in place, we move down to the 1-hour chart and the Asia session itself. As the Asia session opened, price initially held near recent balance levels. There was no immediate expansion and no early signal of aggressive continuation. Over time, selling pressure began to increase. Price started to push lower in a more sustained manner, moving away from the weekly 120 moving average rather than rotating around it. As this downward pressure continued, momentum gradually accelerated, instead of reversing quickly. Eventually, the sell-off transitioned from a controlled decline into a sharp extension. Within a relatively short window, price moved approximately 1,950 points below the weekly 120 moving average. This was not a single impulse, followed by immediate stabilization. Price continued pressing lower, moving through intraday reference areas without spending significant time consolidating at each one. As this extension developed, short-term volatility began to change character. On the 1-hour chart, the short-term Bollinger Bands widened steadily rather than all at once. This tells us that participation increased progressively as price moved lower, rather than appearing as a single burst of activity. Despite this growing short-term volatility, the longer-term Bollinger Bands did not expand meaningfully. They remained relatively contained, even as price moved further away from its recent mean. This contrast indicates that the market was probing lower prices aggressively on a short-term basis, but without confirming a broader volatility regime shift. As price approached a familiar structural area, the pace of the decline began to change. The sell-off did not stop precisely at the December 18, 2025 U.S. session retracement anchor high. Instead, price pushed slightly above that reference, remaining below it for a brief period rather than bouncing immediately. During this overshoot, price traded on both sides of the prior U.S. session reference rather than rejecting it instantly. This behavior matters because it shows that the level was tested through time, not just through price. After spending time in that zone, the selling pressure began to lose momentum. The Bollinger Bands stopped widening and began to stabilize. Price no longer pushed lower with the same urgency it had earlier in the session. Gradually, price rotated back upward toward the Asia session anchor bar. This rotation was not fast, and it was not impulsive. It unfolded over multiple candles, reflecting hesitation rather than conviction. When price eventually reclaimed the Asia session anchor, it did so without accelerating higher. This does not signal strength or reversal. It tells us that the Asia session failed to build acceptance below its own reference, despite having spent time attempting to do so. That failure of acceptance is the key outcome of the first phase of today's session. After reclaiming the Asia session anchor, price entered a different phase of behavior. Instead of continuing higher aggressively, price began to rotate slowly upward, revisiting levels that had previously been left behind during the sell-off. This rotation occurred gradually, with price frequently pausing and consolidating between pushes rather than moving in a straight line. During this period, short-term Bollinger Bands narrowed noticeably, reflecting a reduction in volatility and a shift away from urgency. As price moved higher, it approached the weekly 120 moving average once again. This interaction did not occur as a single test. Price approached the average, moved away slightly, and then returned to it, indicating repeated evaluation rather than immediate acceptance. At the same time, the 1-hour 120 moving average came into alignment with the weekly reference. This created a broader response zone rather than a precise level, increasing the likelihood of rotation rather than resolution. Throughout this interaction, the price did not establish sustained structure above the weekly 120 moving average. It also did not reject it decisively. Instead, price remained in proximity, continuing to test the area without committing. If this interaction fails, the next structural question is not directional. It is sequential. If price fails at the weekly 120 moving average but remains above the Asia session anchor high, then the market remains structurally compressed. In that case, price may continue oscillating between these two references, revisiting them multiple times as volatility alternates between brief expansion and contraction. This type of behavior reflects balance seeking rather than trend development. Structure remains unresolved, and price continues to explore value rather than define it. If, on the other hand, price fails at the weekly 120 moving average and later loses the Asia session anchor to the downside, then structure opens toward deeper separation from the weekly reference. In that scenario, attention naturally shifts back toward lower US session reference zones that were previously tested but not accepted. Throughout all of this, the higher time frame environment remains unchanged. The weekly moving averages continue to compress as the declining weekly 20-period moving average approaches the weekly 120-period moving average. This compression reinforces that the market is still in a negotiation phase. Sharp movements may occur, but they are more likely to function as tests rather than confirmations. At this point, price has tested a prior US session retracement zone, failed to build acceptance below the Asia session anchor, and returned to interact with long-term reference levels. Volatility has shifted from expansion to contraction, and structure remains unresolved. The market is not offering conclusions yet. It is still defining structure through time, interaction, and repetition. Structure decides first. Price follows later.